Hello students, I hope you are doing good, enjoyed your holidays. Today we'll do with chapter ledger, question number 3. From the same question we'll make the journal, post them into the ledger and prepare the trial balance. So here is the question. Following balances appeared in the books of Ram and Shyam on January 1, 2018. Assets are cash in hand 30,000, stock 36,000, Lal Chand 7,600, Mukesh Khanna 16,200. Lal Chand and Mukesh Khanna are the debtors. Furniture 8,000. Liabilities we have the creditors Ghanshyam 6,000 and Vinod 8,000. Here following transactions took place during January 2018. Here is the date for transactions and here are the various transactions that happened. But before making journal for these, let us do the opening entry. We have learned that we will debit all the assets and we will credit all the liabilities. So let us put this: cash in hand debit 30,000, stock debit 36,000, Lal Chand debit 7,600, Mukesh Khanna debit 16,200, furniture debit 8,000. And on the credit side we have to Ghanshyam 6,000, to Vinod 8,000. Now when we add this side, we find it is coming to 97,800, and when we add this side it is coming to 14,000. So it is known that the difference will come on the two side. So after deducting this from this, we found that we are getting 83,800, which is the balancing figure, and so this will be the capital account. Opening entry made. Now let us come to the transactions. January 2, purchase typewriter 7,500. Now we know that typewriter is an office equipment, so it is coming in real account debit, and while purchasing office equipment typewriter, cash is going out. So both belongs to the real account. What comes in has to be debited and what goes out, that is cash, has to be credited. Typewriter purchased. January 4, goods sold for cash of list price 25,000 at 20% trade discount and cash discount 5%. Now whenever there is a trade discount, we don't show in the journal, we show only on during the working, in the working. So the list price or the catalog price is 25,000, but is sold for 20% trade discount. That means 25,000 minus 20% is 20,000. Okay, so 25,000 into 20% is 5,000. So when we minus, it is coming to 20,000. So it is cash sales, goods sold for cash, so cash comes in. We are allowing a discount of 5%, so that is a expense, so debit, and the sale is for 20,000. So after trade discount, sale we are crediting because it is revenue, and as per the nominal account we have to credit. So sale is coming to 20,000 and 5% of 20,000 is 1,000, and after deducting we are receiving a cash of 1,000. What comes in is 19,000. The next we have is 6th. Okay, we have 6th of January. Okay, so here January 6, sold goods to Gopal Seth for 10,000. Now this is a credit sale because there is no word cash over here. Okay, so here Gopal Seth is the receiver and two sales because it is revenue, and as per the revenue we have to credit the revenue. So Gopal Seth debit 10,000 and two sales credit 10,000. Goods sold on credit to Gopal Seth. Then we have January 8. Gopal Seth returned goods for 1,500. Now whatever was the sale, our revenue, when it has been returned, when the sold goods will be returned, we'll have to pay back the money, so it will become our expense, so it will reverse. So sales return account debit, and who is giving the goods? Now who is returning? The giver is Gopal Seth. So sales return debit, account debit to Gopal Seth 1,500, 1,500 goods returned. Then we have next is January 12. Okay, we have January 12. purchased goods from Arun for 12,000 and from Varun 15,000. Okay, let me bring this down so it will be easy for us to see. Okay, so here we have purchased goods from Arun 12,000 and from Varun 15,000. We'll make a compound entry here instead of making two separate entries. And how to make a compound entry when two transactions are taken on the same day, okay, and it is similar. Like we have, if we make for Arun, it will be purchase to Arun, and if we make for Varun, purchase to Varun. So simply we'll make a compound entry by debiting one purchase, and so we'll debit purchase to Arun 12,000, to Varun 15,000, and we'll add here and we'll put 27,000 goods purchased on credit. January 13, settled Arun's account in full after deducting 5% for cash. Okay, now we have Arun was supposed to pay purchased goods on credit. So we were supposed to pay to Arun 12,000, and we are settling Arun's account by making a full payment and receiving a discount of 5%. So 5% of 12,000 is 600. Arun is the receiver because he from whom we have purchased the goods. He is the receiver for the money, and to discount received we are crediting because we are earning, we are getting some discount, and to cash we are crediting because it goes out. So 12,000 was the amount that was supposed to be paid to Arun. We received a discount of 5%, 600, and the balance 11,400 is to be paid, or what goes out, real account cash, will be 11,400. Cash paid to Arun in full, settlement. Then January 14, cash paid to Ghanshyam in full, settlement of his account. Okay, now let us check how much. Now Ghanshyam was also our creditor, so how much we were supposed to pay to Ghanshyam? We were supposed to pay 6,000. Okay, and now we are settling with Ghanshyam. So here on January 14, here it says paid cash to Ghanshyam in full, settlement. Ghanshyam is the receiver. To cash goes out 6,000, 6,000 cash paid to Ghanshyam. Okay, now we have January 16. Okay, January 16 we have received 7,500 from Lal Chand in full, settlement of his account. Okay, now Lal Chand was the debtor. Now if we go and see how much we were supposed to receive from Lal Chand was 7,600. Lal Chand 7,600, and what we are doing here, we're settling with 7,500. Okay, so here we're settling with 7,500. So here Lal Chand was supposed to give us 7,600. We allowed him a discount of 100, that is our expense, and we received a cash of 7,500. Okay, so cash received after allowing discount. Then we have January 17, purchase scooter for office use. What is coming in? Scooter is coming in, debit, and what is going out? Cash is going out, credit. Scooter purchased 18,000, 18,000. Then next we have January 20, sold goods for cash. Very simple, cash comes in 20,000, and sales is, we are selling for cash, so sales is revenue, so we are crediting 20,000 will be cash, debit 20,000, what comes in to sales account 20,000, this is revenue. Okay, 20,000 goods sold for cash. Then we have January 22, received from Gopal Seth 4,850 and discount allowed 150. That means the settlement is for 5,000. Okay, so here we are receiving a cash of how much we are receiving a cash for. So we are receiving a cash for received from 4850 from Gopal. Okay, so here we have received a cash of 4850, discount allowed 150, so we are settling it for 5000 to Gopal Seth. Gopal Seth is the giver. Okay, now how Gopal Seth has become a giver, let us see here. Up, if you come up here, we'll find out that we had sold, okay, we had sold some goods to Gopal Seth. Okay, now we are not settling the full 10,000, we are settling only 5,000. 4,850 cash we are receiving, and 150 is the discount allowed. Okay, next we have is paid wages 7,000 and salaries 3,000. There is no word check written here or by bank, so we'll assume by cash. So we'll make a compound entry again here. Wages 7,000, salaries debit 3,000, and together we are paying a cash of, cash goes out 30,000, expenses paid. Then we have January 28. On January 28, here we have withdrew goods for 2,000 and cash 1,500 for private use. Okay, so here drawings, whenever we have any private withdrawal or for any private use, we write the word drawings, we debit, and then some goods are being withdrawn, so we'll write the word purchase, because the amount of purchase is been reduced. It is not sold out, but it has been reduced on the cost price, so we will credit the purchase account, and cash goes out in terms of private use. So 1,500 is the cash withdrawal and 2,000 is the goods withdrawal. So together we have a drawing of 3,500 amount withdrawn. Then next we have is, okay, paid for life insurance for proprietor 1,600. So this is also a we can say a drawing, because it is for private use. So drawings to cash, paid life insurance premium for the proprietor 1,600 and 1,600. So this is how you have to make the journal entry. You have to keep in mind the rule of the journal entry. We have got real account, debit what comes in and credit what goes out. Personal account, debit the receiver and credit the giver, and nominal account, debit the expenses and losses and credit all the gains and revenues and incomes. So here only by learning the rule of journal entry you will be fluently be able to do the journal, prepare the journal for the questions. Now we got here the journal prepared. Now out from this journal we'll post it into the ledger. Now the first thing we'll have to do is, for individually each account we'll prepare one ledger. Like we have here cash in hand, stock, Lalchand, Mukesh, furniture, Ghanshyam, Vinod, capital. Then we have office equipment. Cash is already made, so don't repeat it. Again here cash is made, don't repeat it. Then we have discount allowed, sales, Gopal Seth, sales again is already made. Sales return, Gopal Seth already made. Purchase we have to make, Arun, Varun, Arun already made. Cash already made. Discount received we have to make. Ghanshyam, it's made already. Cash is made already. Both are made already. Okay, so we have here scooter we have to make. Then we have to make, these are all made. Wages account, salaries account, and then drawings account we have to make. Purchases already made, cash already made. And so here we have to make individual ledgers for these accounts. So here I've already made ledgers for us to keep it keep the video short and to be time saving. So we have made cash account, and then when we come down, stock, Lalchand, Mukesh. Okay, so by mistake I have put your account over here. Okay, then we have here furthermore furniture account, Ghanshyam, Vinod, capital, office equipment, discount allowed account. Okay, and then on this side we have got sales, Gopal Seth, sales return, purchases, Arun, Varun, discount received, Scooter, wages, salaries, drawings. Okay, so here don't repeat it individually, we have to make the accounts depending on the journal entry. So let us come first to the first journal entry. Okay, here it says the first journal entry we have made cash in hand debit, stock debit, Lalchand, Mukesh, furniture, Ghanshyam, Vinod, and capital. So this will be the opening entry. Okay, so cash, we know it is asset, so the opening entry will start from the to side. So we'll write here in the cash account the opening entry. Okay, we have balance BD 30,000, that is coming January 1, the opening entry. Now let us come, we'll write the opening entry for each. Okay, so we have here stock. So for stock is also asset, so the opening entry will start from the to side. Okay, so here the opening entry 36,000. Okay, balance BD 36,000. Then we have Lalchand, opening entry will start from the to side, so we have down here Lalchand, we have the opening entry. Now if you forget to write to and by, there's no problem. Okay, like it should be on the correct side. Like I have in none I have written to or by on any side, but it has to be on the correct side. If you forget, no problem. Okay, so here Lalchand is a debtor, so opening entry 7600. So likewise we'll write the opening entry for Mukesh Khanna. So Mukesh Khanna is also a debtor, so opening entry will start from the to side, this side, 16,200. Then we have furniture 8,000, the opening entry for the furniture will be to side, this side, because this is asset 8,000. Okay, then we have to Ghanshyam. Now this becomes the liability, so the opening will start from the buy side. Okay, so when we come down here we have Ghanshyam, the opening will start from the buy side, buy balance BD 6,000. And then we have Vinod. For the Vinod is also the creditor, the liability, and so the opening entry for Vinod will be on the buy side 8,000. And then last but not the least, we have capital. This is the liability, so it will start, this also the opening entry will start from the buy side. So we have capital, buy balance BD 83,800. So after we have done the opening entries in each of the ledger here, now let us start from the transaction January 2. Okay, here it says office equipment debit to cash. So how we'll read office equipment to cash. So let us open the ledger and let us go to the office equipment. Let us search where is the office equipment. So here we have the office equipment. So how are we reading here? This one. Okay, so this one we are reading as office equipment to cash. So here we'll do the posting office equipment to, this side is to cash. Okay, office equipment to cash. Now we know that it has to be double entry system, which means in both the books the entry has to be made so that there is no mistake. So office equipment to cash we have done. Now we will go in the cash account. We will go in the cash account and we will post office equipment on the buy side. Office equipment to cash. Now let us go to the cash. Okay, so cash we have here cash by typewriter I have written here. Okay, we can write here office equipment. Okay, so let me change this and write this as office equipment account. Okay, so here what is there? What was the journal? Journal was office equipment to cash. So in office equipment we'll go straight and write down to cash what we have done already here. Once again let me show you. Here we have down office equipment to cash. Now we don't have to forget to enter office equipment in the cash account ledger. So we will go to the cash account ledger, and what will happen, what is on this side, okay, what is on this side, on the top side will become buy. Okay, so here it will be buy office equipment to cash, if you read this way. Okay, and here will be down, let us come, office equipment to cash 7,500. Next journal we have cash account debit, discount allowed debit to sales account. So we'll read this way, cash account debit to sales. We'll leave this one now, cash account debit to sales. So we'll go to the ledger and first we'll go to the cash account. Okay, so we'll go to the cash account first, and what we said, cash account debit to sales. Now we'll go to the sales account, and the top one will become buy. So buy cash account debit to sales 19,000, and here also we have 19,000. Okay, now the same journal will read the second time, discount allowed debit to sales. Now let us go to the discount allowed, and in the discount allowed, now we'll go to the discount allowed, and here in the discount allowed it is saying to sales, discount allowed to sales 1,000. Now we'll go to the sales and this will become as buy. Okay, so let us go to sales, and this is becoming as buy discount allowed 1,000. Okay, so this is how you have to post into the ledger in both the books which has been affected in the which you are using in the account has to be, and the posting in the ledger has to be done. Then we have Gopal Seth to sales. Go to Gopal Seth. Okay, we'll go to Gopal Seth. Here we have Gopal Seth to sales 10,000, and then where we have to go? We have to go to sales, and this will become as buy. Here we have sales account, so we have buy Gopal Seth 10,000. Okay, so this is how we have to keep on posting into the ledger. Then we have sales return. Go to the sales return. Okay, sales return, here we have, and sales return to Gopal Seth. Sales return to Gopal Seth. Now go to Gopal Seth, this will become as buy. Buy sales return 1500, and here 1500. Okay, so this is how you have to keep on posting. Then we have purchases to Arun and Varun. Read separately purchases to Arun. Let us go to purchases. Okay, so here we have purchases to Arun. Now we'll go to Arun, and this will become as buy. So here we have down, we have Arun, so this will become as buy 12,000. Purchases to Arun 12,000. Purchases to Arun 12,000. Then we'll read this separate. We have purchases to Varun 15,000. So we'll go here again to the purchases to Varun 15,000, and now this will go to Varun. Okay, and we'll go to Varun now, and the purchases will become buy. Okay, 15,000 here. Then we have, so we'll keep on doing. Okay, Arun to cash. Okay, so Arun to cash. So let us go to Arun. Here we have Arun, and then cash was 11,400, so Arun to cash 11,400, and then now we'll go to cash, and this will become as buy Arun 11,400. Then we have Arun to discount receipt. Let us go to Arun once again, and here we have, we go to Arun once again. So here Arun to discount receipt 600. Now we'll go to discount receipt, and Arun will become as buy. Okay, so here discount receipt by Arun 600. So we'll keep on doing. Okay, then we have Ghanshyam to cash. So we'll go to Ghanshyam, and we'll write to cash in Ghanshyam. So here we have, okay, this one is Ghanshyam. So here we have Ghanshyam to cash 6,000, and then we'll go to cash account, and this will become as buy. So we'll go up. Okay, cash here, so it will become buy Ghanshyam. So here we have, this is how we have to post each into the ledger. Okay, so I hope you must have understood how to post each of these in the ledger, and complete the journal, and after that post it into the ledger. Okay, so the remaining journals you can post it. Okay, when you do in your copy, you will understand how to do it. Okay, so this is the journal, and slowly I will show you the ledger. So here the cash account, we have the following postings. Okay, we have here, and then what we'll do is we'll find the balance CD. So what we'll do is we'll add both the side, and we'll find out which side is greater. So this side we are getting 81,350, and this side we are getting till here 56,000. That means this side is greater. So the after minusing the amount, that is 81,350 minus, when we add these will have to find the balancing. It depends on which side is greater or which side is less. So this side is greater and this side was less, so we got a balance of 25,350. Balance CD, balance carried down. So January 31st. And now we have in the next year 2000, next month 2018, February 1, we have a balance PD of 25,350. Okay, now let us come to stock account. Stock account, we have here, we had the opening balance 36,000, there was nothing, so closing balance 36,000, 1st February 36,000. Okay, then we have larger. I have done like in your video I've done half posting of the ledger. You have to complete all the posting of the ledger in the journal. Okay, so we have here larger. The opening balance was 7,600 and we have paid a cash of 7,500. Discount allowed was 1,000. Okay, so this is settled. Okay, so there is no balancing figure here because already it is settled. Both sides are same. Okay, then next we have is Mukesh Khanna. Mukesh Khanna, we have here, he was also the debtor, so opening balance was 1,600, no payment was done, so closing balance was 16,200. And next month on February 1, we have the balance PD of 16,200. Okay, then we have next is furniture. This is also the asset, so we have the opening balance of 8,000. Okay, there was nothing, nothing, so closing balance also is 8,000. And on February 1, the opening balance again came to 8,000. Okay, because this side was nothing, nil, so we have put 8,000 here to balance both the sides. Then we have Ghanshyam. Okay, so Ghanshyam, we have, he was the creditor. The opening balance 6,000, two cash 6,000, so settle both the sides, so we don't have any balancing CD over here. Okay, then we have Vinod. Vinod is also the creditor, so opening balance is 8,000 and nothing was paid, so this side was nothing, so to balance the CD we have to bring 8,000 this side, so this side will match both the side. Now in Ghanshyam, two cash was 6,000, so it is matched both the side, so no CD is coming. Here BD was 8,000, so to close it down we have to bring 8,000 so that both the side will match, and so we got the closing balance 8,000. And February 1, on the this side we have the balance BD 8,000. Capital account, opening balance 83,800. We have the closing balance, we have 83,800 because we have to balance both the sides. So if this side is 83,800, this side also should come same, so CD is coming 83,800 and the opening balance for February 1 is 83,800. Next we have is office equipment. The office equipment, here we have office equipment 2 cash 7,500. This side was nothing, so to balance this side we have to write down 7,400, with this. Then we have purchases account. Now if we add on this side, we can see this coming to greater, that is coming to 27,000, and this side is 20,000. So to match both the side, we have to write balance CD 25,000 on this side, and so the next month the opening balance will be 25,000. Okay. The next we have is Arun. So same thing will keep on following. This side is greater if you see it, okay, but if you add this side is also coming to 12,000, so there is no balancing figure in this. Okay. Okay. So here we have Varun. So Varun, we got here, we have um, buy purchase 15,000, and there was no payment, nothing done. So to balance this side, we have to add the same amount. Balance CD will come as 15,000. go on the debit side, and this side CD will go on the credit side. But not to get confused, just do the straight post. This has become the opening of February 1. So this is on the debit side. So the furniture will go on the debit side. Okay, like this one. This one has no CD, so there will be no Khanshyam. If you see here, we have not written any Khanshyam here because there was no CD. All the payment has been made. Okay. Then if you come to Vinod here, okay, if you come to Varun here, so this was the CD which became DD on the buy side. This is on the credit side. So in the trial balance, Varun will write here, and it will go on the credit side 20,000. So this is how only the balance amounts you have to write down. If the balance is coming February 1 on the debit side, then write on the debit side. If the balance of the next month opening is coming on the credit side, then you write on the credit side. And to know whether your answer is right or wrong, both the sides should match or tally with each other. So the answer is coming 1,57,400 and 1,57,400. Okay, so do this in copy, because if you only see this and you don't